Bullish signs or bearish signs on Bitcoin as we enter into new ETFs emerging in the market. We'll talk about all that today. My name is Paul Barron. Welcome back into Tech Path. And I think Hong Kong will be a part of this, along with a whole slew of news around the macro side of things. So make sure and stick around. And by the way, if you've not been smashing that like button, you got to start right now, because that's going to help spread the news about what's happening in the crypto markets for sure. So make sure, just before we get started, hit that like button. Get us going right there, and that usually helps. So let's get into it. I do want to thank our sponsor. That's iTrust Capital, long-term holding of your crypto. You can do that in an IRA. It's very easy to do. All you have to do is jump over to iTrust Capital. You can start parking your 2023 IRA plans right now and do Bitcoin, Ethereum, altcoins, gold and silver, all sorts of assets right there within your IRA. And guess what? If you have not experienced an IRA before, check with your tax advisor. I think you're going to be surprised at what kind of benefits you're going to gain from that. So make sure and use our link. It's a $100 funding reward if you decide to do something there at iTrust Capital. All right, let's go a couple of things in. By the way, did you guys know we are over on CoinMarketCap? We've been there for a while. Make sure if you're using CoinMarketCap, follow our feed. We get a pretty good, attraction over there, but we're trying to grow a little bit of that for our CoinMarketCap presence over there. Let's take a look at the markets right now, holding at around 2.3 trillion overall market cap. Of course, Bitcoin up to 4%, almost 5% on the 7-day. Market cap currently around 1.2 trillion. So holding the market position for sure. So the question I think a lot of people are asking right now is Bitcoin going to continue this sideways movement? Are we going to see a breakout? That's been the big question. Are we in that fake pump zone right now and potentially in for a retracement? Hong Kong Bitcoin ETFs and Ethereum ETFs are now launching officially on April 30th. This is a big deal. I just wonder how much activity we're going to see on the ETH side of things. I think everybody's kind of pointing at the Bitcoin ETF, but I just wonder if we'll see a surge on the Ethereum ETF. A couple of points in the article that I want to kind of get to. It's an in-kind feature, also attracting coin holders by offering ease of converting things, fully regulated ETFs. This is going to get into, I think, a very good position. One, of course, it's a regional component in terms of awareness, and this is one of the things that people have been kind of challenging for some time. Hong Kong is aiming for this whole in-kind creation. In the U.S., it's cash in, Bitcoin ETF out. While Hong Kong aims for Bitcoin in, ETF out. This could be an opportunity for the market. We'll see how it goes. Potential fee war could also break out. Harvest coming in hot. This is one of the offers with a fee waiver down around 0.3. So that's pretty significant in terms of 0.3 basis points. So not bad, not bad. James Seyfert actually put a tweet out on this. Let me kind of zoom in on that for you guys. There's the breakdown. I'll show you this right here. There's Harvest coming in at 0.3 right now. They could be the early leader. And remember, early leaders have a tendency to kind of hold that pole position, much like what BlackRock has been able to do. Granted, GBDC, that's the OG, but the new guys coming in, that is the ones we're watching. So maybe Harvest does get a little bit of a pump here for sure. All right, let's go over to another story, and another one I want to hit on. Successful Hong Kong crypto ETF flows would pale in comparison to the U.S. funds. And I think everybody kind of knows that. They're saying basically this would represent about 2% of the region's ETF market. If you look at that in comparison to what's happening with BlackRock, that is a marked difference. But there is some secret sauce here that you need to pay attention to. Such funds are not likely to welcome inflows anywhere near those seen by U.S. Bitcoin funds, but a lot of industry people are saying that this could spur other countries to greenlight the crypto ETFs. If that happens, if we see a whole slew of countries saying, okay, Hong Kong's pulled the trigger, maybe now is the opportunity for us to, and it just starts a trickle effect through whether it's Asia or we see this even in Europe, that could be a little bit different, because now you're talking about a global market that's really got an appetite for ETFs that is led and triggered by what's happening in the United States. So quite a bit happening in that area. Make sure and drop some questions in over on the sidelines. I'll try to get to as many as I can. We'll probably have a few charts that we'll take a look at on a couple of altcoins or in general, maybe Ethereum as well. We haven't been looking at Ethereum as much. BlackRock's Bitcoin ETFs achieves a record inflow, now one of the US top 10 ETFs. This is so crazy. For an ETF, now granted, I mean, yes, it's kind of been on the play, but imagine if BlackRock had done this last year, we're leading into this market. Where would it be? And also, where would Bitcoin be with this? If you look at some of the points that they're hitting on, this right here, this was the tweet by Eric Balchunas showing the daily inflow streak. And of course, BlackRock right there in a good position, 69 days. That was a few days ago. We showed that before, but not bad for being a top 10. And remember, this is now starting to become their cash cow. So 24% of the firm's total ETF flows are generating from the IBIT ETF. So, wow. I don't know if I was in BlackRock and I was seeing these kind of numbers, I'd just shake my head and go, what have we been doing here? Why haven't we been doing this before now? Kind of crazy overall. Smash the like button. That's one of the ways it does help the channel, as I said. And also for many people, in many cases right now, and I've been watching this through Google Trends, is people, what are they searching for on crypto investing, Bitcoin, Ethereum, etc. The way that they start is always YouTube. So if you want others to find out about what's happening from real channels that aren't pumping and dumping and doing all their craziness, really getting after what's happening in the blockchain sectors, just hit that like button. All right, so I know they're gaga over IBIT, ETF for 24% up on the 1,000 ETFs globally. That's crazy. 1,000 ETFs globally, and these guys are pretty much in pole position here with Bitcoin ETF. So that's getting the attention of Larry Fink. Even Larry, I think, would look at this. I would agree because he is getting more and more bullish. When you hear him on interviews, you listen to his thesis of what he talks about in his annual letter. All of that, I think, has been very bullish, and he is defending actually what's happening in the ETF market, especially around Bitcoin, quite a bit. So a lot of people are asking, why is the price stuck right now? Why are we in this kind of zone that we can't get out of? The halving has happened. We haven't seen these major moves. Granted, remember, we talked about this before the halving, is that the likelihood is some sideways action for a period of time before you see some parabolic moves. And remember, a lot of this has tendencies to flow into that altcoin market. So if we do get that push, that's where we will start to take a look at altcoins starting to move along. So pretty big opportunities playing in for sure. Yeah, I see a few questions coming in, so make sure and drop some in over there. A couple of points within this article. Technical viewpoint, Bitcoin's range-bound price prediction resembles a classic consolidation phase. This we know. During this phase, some traders obviously taking profits. Remember, a lot of people had not seen these kind of highs. So even ones that were maybe buying Bitcoin prior to the last high and didn't, round tripped and didn't get a chance to get out, maybe some people are now taking that chance. So that could be the flex of both people taking some gains and then people looking at, hey, this is just beginning to get started. So a lot of different scenarios playing in this for sure. Behavior creates a balanced dynamic between buying and selling, sentiments in the short term, and that usually leaves the price stuck in a very narrow range, which is kind of where we are right now. But if we see a bull flag target coming out of this, that's what I think a lot of people are pushing to. So short-term rally toward the flag's upper trend line around 70. I don't know if we're going to hit that anytime soon in April, but possibly in May. We'll see. Here's one analyst saying, hey, we see a bull flag target somewhere around 88.3 by May's end. That would be a pretty significant run. And here would be my question to you guys. If you saw an 88,300 Bitcoin, what are you doing at that time? Are you shifting immediately into altcoins? Are you chasing Bitcoin? Are you going after Ethereum? Are you going completely off the reservation and going after a lot of these upstarts, whether it's memes or other types of tokens out there that are brand new in the market, moving on what's happening in the heat of the moment? I'd love to hear your strategies on how you're playing that out, because there's a lot of people out there playing it in different ways, for sure. One thing to think about, though, is the VIX. And when you look at the VIX, this is a Kobeisi statement here, volatility index, it's down 15% this week in a sudden shift back to risk on mode. Now, if you look at that, let me kind of blow that up for you a little bit. Short-term volatility is contained right now. If we don't break this position right here, and it's continuing to be in a good possible opportunity for risk-on movement, which would mean that, okay, now risk-on means where we could get a little bit juicier into some of these altcoins maybe, or possibly into Bitcoin if you look at that as a risk asset, which I see less and less people looking at that as a risk asset. But one thing for sure, this is the most resilient market of all time. People are analyzing this left and right. And I think now what we're looking at is what is the length of the bull run that we're in right now? Because we're in a bull run. You've got a 3,000 plus ETH. You've got almost $150 Solana, even though it's retraced a little bit. You've got Avalanche closing in on 40 bucks, and you've got Bitcoin above 60K solidly. So what does that look like coming out? I've got a couple of clips here that kind of lay into this a little bit. This is an analyst. The guy's name is Barry Bannister, and he's an equity strategist that breaks down maybe how this plays out. Listen in.
We've had the view since last year that 2022 to 23 actually had a recession. That if you look at a recession, it's income, production, sales, employment, and fixed investment. The only thing that didn't weaken was employment. We're structurally short labor. We had a recession in everything else, like real retail sales. And so what we're doing now is recovering from a recession, which is why you've had this burst of productivity after a recession.
Not a classic recession.
No, we call it pseudo-recession. It was a major slowdown, like the mid-teens. We had one in the 80s. We had one in the O's. And because of that, the actions of the market are very much like a post-recession recovery. And that's what caught the Fed off guard, as the economy came back.
So that's where you have those double starts. And this is something that is very dangerous because it is difficult to gauge market strength. I think earnings will tell us a lot because we've started to already see a lot of weakening in earnings for most of the tech companies, even outside of the Magnificent Seven. But I think that is going to be the key here. And remember, the Fed still has to weigh in on this because they, unfortunately, are going to be the harbingers of whether the market goes up or the market goes down. And the key here will be, do they raise the rate? Do they pull back? This is a very, very critical point in time that we are finally entering after about a year of speculation. This analyst goes on, he talks a little bit about the problem that the Fed has around messaging. Listen to what he had to say.
So why does that make you less bullish?
Well, when you think about it, the yield curve is inverted, meaning short rates are above long rates. And I think the yield curve will flatten. And a lot of people think, well, it's because the Fed's going to bring the short end down. But I actually think the long rates will go up. 5 was the norm before the financial crisis in 08, 5% on the 10-year. I think we'll see 5 again. And they'll cut a little bit, but their problem is messaging.
So your view on whether stocks continue to perform well is based on whether the Fed cuts or not?
No, the Fed is extremely important. I mean, you know, the market is the liquidity and rate-driven second derivative machine. But we just thought valuations, some of the the AI hype was a little overdone. So what we're looking for is a 10% correction off March 28th, which takes you down to about 4750 on the S&P 500. We'll trade around these ranges through the summer.
All right, so 47, I don't know that that's a huge correction. I mean, yeah, it is a correction. And I think, to his point, that with the Fed possibly maybe even looking at a hike coming in, this is a complete spin on what we saw, Q4 of last year, where everybody was anticipating as many as 6 rate cuts, which was just, crazy. And I think this is the correction time. Now are we in a position before a big correction? And the question now is, when does that correction potentially occur? If we are due for one and the Fed has maybe missed a few things here, do we actually see these overvaluations start to come back off? Because it isn't really being pushed from a macro standpoint unless we get into some craziness. But it's intriguing because right now you could look at this bull run and say, when does it end? Is this a 2024 end? And we see kind of that backside on the front end of 25. He goes on to analyze this because this is a different take than I think a lot of people have had. Listen to what he had to say.
When will you be as bullish as you were last year.
We'd have to have another bear market. And I do think there will be a bit of what we call a term premium shock that people are going to realize in 2025, next year, that the economy is bumping up on resource constraints. Inflation will bottom out and gradually turn up. Before he leaves office in May of 25, I think it is, I think Powell might be hiking rates again. And then the market would sell off again, and we get another great entry.
We've had a lot of.
You think a bear market 20% down?
That's probably more of a 2025 story, though.
But we do 10 this year, correction.
A 10% correction.
4750 on
another
the
20%,
S&P.
though, you're saying.
And then
No, I think we rally back. If you think back to the end of the year, we're going to have a relatively resilient economy, and what we've been focused on, we call it cyclical value. This would be a broadening out into financials, industrials, energy, basic materials, industrials. Some of those have already moved. But we think it'll broaden out in the fourth quarter. It'll be less tech-centric in terms of the recovery. But seasonally, I'm a little concerned between May and October. I just don't fight that too hard.
So this is a very interesting take. Again, Stifel is the analyst company. This is a big difference because I don't know if you guys noticed that with the CNBC hosts, is a lot of them were kind of, set back in their chair a little bit on the analysis, especially around the timing, because what this could allude to is instead of a rate reduction, possibly a rate hike. And that, of course, could get us back down below 5,000 on the S&P. Then you get into volatility in some of these other risk assets, which, of course, affects crypto. So the real question is, does this bull market extend beyond 2024? And remember, guys, here we are. We're moving in on May, almost 5 months in. Is it going to get heated really quickly? I think this Q4 and Q3 are going to be very interesting this year. I want to go to another tweet right here. This is Raoul Pal. He hits on a couple of things that I want to focus on. It's a long tweet, but I'll focus in on one or two areas. He's kind of talking about Tesla and NVIDIA, which is kind of this war of philosophies and worldviews, not really about stocks themselves, obviously. But he's split between those who want technology to prevail and those who don't want things to stay the same. Well, tech, if you follow our show, believe me, you're a tech guy or a tech person, and it's not going to slow down. It's going to continue to accelerate. The results have shown that over the last 30 years, tech has outperformed any other strategy. I agree. I think, and I would agree with Raul to a certain extent, we're in a major hyper shift, much like we were in the early 2000s. That was a hyper shift, and here it is 25 years later. We are in that next hyper shift. It has been that kind of a slow slog of growth for the last decade. Now I think things are changing up a little bit. Crypto, blockchain will have a lot to do with that. Further in his tweet, markets are all about attention and storytelling. Don't ever believe otherwise. Totally agree that now. I used to not believe that. And watching the crypto markets over the past 5 years, I've seen these narratives been able to do things with tokens that made no sense. I've seen narratives around where technology is shifting. But remember, we didn't have AI. We were on the lagging end of social, the lagging end of mobile, the lagging end of most of the tech that we know and use today. And now that has changed. We are actually seeing a potential light at the end of the tunnel, which could change the future very quickly. And of course, blockchain will be a big part of that. Exponential growth of tech and its outperformance versus the overall market. I totally agree with that. I think we're going to be in a position there for sure. Let the big picture trend be your friend. Best to leave your emotions at the door. So AI is going to be a part of this. Blockchain is going to be a part of this. And the finance component that's going to drive in here will be the tug and pull from Wall Street that we'll be dealing with. But I think we're going to see a huge shift in the kind of companies that make up the S&P 500 for sure. All right, make sure and smash the like button. Hit that, guys. We're trying to get more likes here because that helps this channel get out there. And you are in the PBN family. You guys are the ones that make this work. And we only come here for you guys. Believe me, we do just crazy research and do a lot of work just for you guys. One thing that is not being talked about as much as it should be talked about, and that is BRICS. They're exploring now, guess what, creating a stable coin for global trade settlements. Another element of technology, another reason why Raul is right. And if we get into true stablecoin settlement, especially in this emerging, remember BRICS has been growing very, very fast over the last 3 years, and I think it's going to accelerate only their GDP is getting ready to encroach on G20 nations as a whole. That in itself, and this just is the beginning. So this could be a very interesting time for the BRICS. So watch that one for sure. Here's an interesting post from Matt Hogan. 5 things to expect by the next halving. This is 2028. And I'll go into some points he hits on right here. And some I agree with, some I don't. Let me kind of zoom in on that for you guys a little bit. Bitcoin's volatility will decline 50%. So volatility declining for years, yes, I would agree. But the primary one he thinks is ETFs kind of helping that. I would agree with that statement. I think Bitcoin will get less volatile. We'll see less growth, but much more consistent growth, much like an S&P stock. 2.5% allocations on Bitcoin. I think that's a little light for common target on portfolios. I think because of the run that we'll see in this bull run and possibly Bitcoin's innovation, then we could see that 3 to 5 number. And that, believe me, going from a 2.5 to a 5%, that is significant going forward. So I think that's a little bit soft there, but I understand. Bitcoin ETFs will gather 200 billion in inflows. I'm surprised that that might not be more because of the fact that we're getting new people into the market for the very first time, and you have Gen Z coming in a very rapid pace. Now, granted, the question will be whether or not they go get direct exposure. I understand that is a good argument. Central banks will begin allocating Bitcoin. I think this could happen. Big investors in gold holding roughly 20% of gold. That's another factor that plays into this. I think they'll all start buying Bitcoin before the next halving. I agree with that. I think that will be a factor that they'll get into kind of their version of digital gold. Number 5 was Bitcoin's price would trade above 250K. This is a good one because once you hit that 100K number and you stay above it consistently, the psychology behind that is going to be undeniable where we're going to see. Imagine where Ethereum will be. Imagine where a Solana will be, Avalanche, some of these Flow. I mean, you could look at a variety of technology-driven tokens that will be tacking on to all this tech movement, and that could be big for sure. All right, we're going to get to some questions. I'll take a look at the chart real quick. Last up was, of course, Arthur Hayes, still holding his $1 million Bitcoin price, still in play. A lot of liquidity issue. He thinks this wall of money. I'm in agreement with that. I just don't know how much of that wall of money is going to come. Is it going to be a little wall, or is it going to be a big wall of money coming this way? Governments worldwide will keep printing money, and their currencies will lose out. We know that. The fiat fakery is eventually going to end, and that is when you have to be in the right place at the right time. That's why you want to be listening to this channel, watching this channel. If you're listening on a podcast, join us on YouTube, and when you come over to YouTube, hit the like button. Again, the undecided voters who determine the electoral winners do so based on how they feel about the economy. This is 100% the case, and I think right now we are at the precipice of seeing a shift back to maybe a more progressive leadership. I won't call that in the essence of Trump, but I think what we will see is a shift in the way that Americans look at the economy and what's going to happen. So all that plays into where he's talking, which could be a $1 million Bitcoin going on in the next run. All right, let's get into it right quick. I want to get into a few questions. Did we have a poll today, guys? No poll? Oh, yeah. Okay. All right. Will Hong Kong, Bitcoin, and the ETH ETFs pump the market next week? 76% of you are saying yes, we are going to see a pump next week. I mean, it's possible. I mean, I'm looking at Bitcoin right now. Do we get above that rank at 71.6? I mean, you could pull back in here. Do we get back around that 70? I don't know. This is a really interesting range bind that we're looking at. And plus, you know, our market sentiment index has been holding kind of neutral right now on Bitcoin. So we don't see anything necessarily poking out that's going to blow past. ETH up slightly. But if you go back to Bitcoin dominance, it's been coming off right here. So this is the thing that I still look at. Is this possibly in that position? Because remember, if you go back to Bitcoin dominance back here in February, it slid pretty heavily. And look at the spike that we had. That all that takes is another run at Bitcoin to jump in. So anyway, Crypto 6 Foot says, hey, we're going to pump to the moon. Yes, I think you'll be there eventually. Are you still bullish on Solana? 100%. You know, I love that project. I like the ecosystem. Let's just say it. the amount of things they're doing from an innovation, the ecosystem, from an innovation standpoint, absolutely huge. Paul, what would be another entry point for Pith or Render? Well, let's take a look at Render. And because I like Render still, I mean, we've been in this token for a long, long time, so we're in it in places that a lot of people probably are not in, you know, in that $100 range. So holding it around 8. I don't know that, and you probably won't like me for saying this, I don't know that I would look at Render as a token right now. It's trading at 870. Does it go back up to that, you know, $12 to $14 range? I think this thing is definitely a $20 token when we get moving. But is it the one for you to go into in the Solana ecosystem? I think I'd be looking, again, I'm not financial advice, but if I was playing it, I'm looking for tokens that are going to do that 5x above. Those are the ones. So, I mean, yes, you can put it in Bitcoin, you can put it in ETH, Solana, Avalanche, Flow. You can do it in a lot of different projects out there and probably be fine. But Render, I think I would look for something a little bit more, even though AI, this thing could take off crazy if we get an AI breakthrough too. So that's another thing. All right, let's go. Yes, the Asians are definitely going to jump in. I don't know to what level, though. That's the one thing. I think you also asked about another token. He said, I think one. Which one was it? I can't remember. What about Shiba, layer 3? I mean, is it in the meme coin area? I would still go after the new Sol tokens in the meme. I still like whether you go Kakinu on Avalanche, you go with WIF over on Solana. So I think those are going to play a little bit harder for meme tokens if you're going to go meme token route. A couple other things, Paul. Great channel. I always think we need a Fed to lower rates. Yeah, I think that would be the big, huge point. But I just don't know if they're going to. If we get a hot inflation number coming in, which I'm a little worried about right now. If we get a hot inflation number, that could be a problem. So just be ready because this next inflation number is going to be a big one. Paul, I need your take on H-bar debacle. Listen, I don't know what was happening with H-bar. Well, we kind of know because the research team kind of broke it down. But this thing, of course, just went off the charts. Let me pull up H-bar real quick. Here we go. Yeah, so it went off the charts and then, of course, reversed back down. It was kind of a big news thing on BlackRock, but it wasn't really all the way in. But the point is that H-bar flew like crazy. To be honest, I did a trade on this mainly because I was watching our sentiment data. And I just thought, hey, this might be moving. Something's weird happening. We were texting over the weekend with some of our research team, and I said, what's going on with H-bar? And that was the case. So in and out was kind of one of the things. We have had H-bar on the show many times. If you want to go back and watch many of our videos on H-bar, we like the project. I'm just still looking for Netflix. Just give me Netflix on H-bar, on Hedera, and we'll be fine. Because when that happens, when we see content creation move on there, it'll be huge. Ordinals will run the bull market, or runes, yeah, for sure. I think you're right there. Asian markets are nowhere near as risk averse. Totally agree with that. And you are correct. The United States is very, very hawkish on how they invest. And it's why you don't see as many, even though I am very, I guess, somewhat optimistic about our Gen Z. Because a lot of people I have talked to that are under the age of 30, they understand crypto. They understand what blockchain is doing, and they definitely understand the gaming side of it and the opportunity for digital assets. That's a big deal. So make sure and pay attention there, guys. It's going to be shifting very quickly. Go to where the puck's going. All right, listen in. If you're not part of our Diamond Circle, make sure and get in. It's our own private group where you guys can join. You can get in our Telegram. You can also get additional content that we drop in, only available on the Diamond Circle. You get into our Substack. There's all cool features in there, so make sure and just use the link down below to get involved. And of course, catch me out there on X at Paul Barron. We'll catch you next time right here on TechPath.